Hello and welcome to the Asia Briefing webinar series. Today we will be hearing from Mr. Alberto Vettoretti, Managing Partner of Dezan, Shira and Associates, Vietnam. He is here to present on the key taxes affecting foreign companies and individuals in Vietnam. Dezan, Shira and Associates is a specialist foreign direct investment practice providing corporate establishment, business advisory, tax advisory and compliance, accounting, payroll, due diligence, and financial review services to multinationals investing in emerging Asia. We are currently operating in 5 jurisdictions with offices in Vietnam, China, India, Hong Kong, and Singapore, as well as 2 liaison offices in Italy and the United States. Alberto will now begin.
My name is Alberto Vettoretti and I am the Managing Partner for Dezan, Shira and Associates in Vietnam. Today we talk about key taxes for foreign invested enterprises. There are quite a few of them, and it is very important to pay attention to what they are and also the deadline for the payment of such taxes. Let's start with business license tax. Business license tax is a yearly due for foreign companies and local companies alike, and even though small in numbers, the penalties for not being compliant could be quite stiff. $50 a year normally is payable for companies whose registered capital or charter capital is less than $100,000. For companies with registered capital over $500,000, then $150 are payable every year. So business license tax due once a year. Corporate income tax currently stands at 25%, with current provisions being discussed at local level to bring this down to 20% in order to make Vietnam an even more attractive location for foreign direct investments in Asia. If you are in exploring or exploitation of natural resources, gas and oil business, then corporate income tax will raise from 32 to 50%. So corporate income tax at the moment 25%. However, there are preferential tax rates at the moment applicable to a variety of sectors and also geographical locations within Vietnam. A few examples: 10% for 15 years for new investments in areas which have especially difficult socioeconomic conditions in economic zones, high-tech zones and high-tech sectors like research, tech development, and certain infrastructure projects approved by a state, and software. 10% for the length of the business license for education and training, healthcare, culture, sport, environment, and publishing. 20% for 10 years in areas with difficult socio-economic conditions. These are normally to be found in the outskirts of the larger cities. Reductions and free corporate income tax period are still available, and this largely depends again on the location and on the business sector. So please look around for what the specific rates might be. Apart from preferential tax rates and exemptions, foreign companies can also deduct up to 10% of their assessable income for CIT in order to establish a science and tech development fund. These, however, need to be used within 5 years. Corporate income tax needs to be declared on a quarterly basis and needs to be finalized every year. Let's talk about value added tax, or VAT. VAT is exempt on some goods and services, for example, aquaculture, husbandry, the transfer of land use rights, assignment of capital, salt, life insurances, and other important goods or services in Vietnam. There is also a 0 tax rate on exported goods and services. 5% on essential goods and services, the ones that are important for the development of Vietnam. This could include clean water, fertilizers, feed, sugar, rattan, bamboo, medical equipments, and related stuff. 10% is applicable to all the rest, and this is the most widely used VAT rate in the country. 2 methods to calculate VAT, either a credit method, which is similar to the method used in the West, or a direct method of calculations. VAT is calculated on a monthly basis. Special sales tax. You can refer to the table attached and you can see how special sales tax is applicable to luxurious or non-essential items. If you were to bring in the country such goods, then for imported items, VAT will be imposed on the dutiable value included of custom duties and special sales tax. We talk about special sales tax. The rate could vary from 10% to 70% depending on the item or the service. Please look at the attached table if you want to see a complete list of the goods and services involved. Luxurious and non-essential items normally would attract special sales tax. For imported items, VAT is imposed on the dutiable goods, including custom duty and special sales tax. Let's talk about foreign contractors withholding tax. Foreign corporations doing business in Vietnam or having an income in Vietnam without having established a legal entity or a legal presence in the country, they're not subject to withholding tax. These normally include corporate income tax and VAT, CIT and VAT. Depending on whether or not the foreign contractors adopt Vietnamese accounting standards, then such a foreign contractor withholding tax can be applied on a deemed method or a deduction method. Normally, deemed method is used in most cases, and the majority of services would carry 5% each for both VAT and CAT under such deemed method basis. Let's talk about personal income tax in Vietnam. Vietnam applies a worldwide tax resident income principles, so be careful not to trigger such an event. How do I become a worldwide tax resident in Vietnam? If I spend more than 183 days in a calendar year or in any 12 months, or if I have a place of residency in the country, or if I take up a lease for at least 3 months, I become a worldwide tax resident as far as Vietnamese personal income tax law is concerned. Vietnam also applies a tax on non-residents. If you stay more than 90 days but less than 183 days, a 20% flat tax rate will apply on your Vietnamese source income. In Vietnam, as in other countries, non-taxable allowances are also allowed on a monthly basis, as well as deductions for families. Personal income tax is a monthly declaration with a finalization done within 3 months from the starting of a new calendar year.
Thank you for listening to this episode of the Asia Briefing webinar series. If you have any questions about today's topics, please feel free to connect with Alberto Vettoretti at alberto.vettoretti@dezshira.com. For more information about business and regulatory news, please visit our website at www.asiabriefingmedia.com. Email us at podcast@asiabriefing.com. Follow us on our Twitter at Asia Briefing, or find us on Facebook. Finally, to help our listeners better understand the topic of doing business in Vietnam, Dezan, Shira and Associates publishes a host of helpful business guides, periodic magazines, and other business resources. This podcast was produced by Asia Briefing Media for Dezan, Shira and Associates. We hope that you can join us next time for our Asia Briefing webinar series.